is NDTV and you are watching NDTV Prime.
Salarpuria Sattva. Trust, it's what we build. Presents the Realty Debate with Manisha Natarajan.
Are there 5 reasons why you should invest in property at all right now? Are there 5 markets you can invest in with reasonable confidence of at least 9 to 10%? I won't say 7, that's not a Diwali show then. 9 to 10% returns over the next 3 to 5 years. And if you hold property or already own property, should you hold on to it or should you sell it at whatever price you get and move the money to stocks or other investments? Now, these are questions which become really important, especially at a time like Diwali, which we all believe is the time for you to welcome Lakshmi into your homes or banks. So, here is a realty debate focusing on answering some hard-hitting questions on property investments. Joining me today are Anshul Jain, Managing Director, India, Cushman & Wakefield, Abhiram Himanshu, Managing Director, Redford Capital, Vikram Goyal, CEO, HDFC Realty, Sameer Jasuja, CEO of Prop Equity. Okay, gentlemen, I'm going to straight dive into my first question here. Are there 5 reasons why you should be investing in property today? Anshul, would you like to start with that?
There's probably only one reason, Manisha. I would think if I would have to invest in property, if I want to live there, right? The markets haven't really done too well in the last, 4 or 5 years. Investors on an average have lost money or notional money which could have been invested elsewhere. Your unsold inventory hang is at all-time high. So yes, if I want to live in there today, I will invest. Otherwise,
so are you saying that at least the time is so? Forget investments. The trend has not been great in the last couple of years. You've not made money. There's an opportunity loss. For an end user, do you think he's catching a falling knife, or do you think that this is the time to buy?
It's a brilliant time for an end user because most of the property which is actually in the secondary market completed and where people are living, even that's down by about 15-20% if you can get a good negotiation in. If the property is under construction, that I think is a falling knife. But if the property is inhabited, it's in a proven location, people are living there, I think it's a brilliant time to buy. You can never catch the bottommost point in the market.
But do you feel...
But it feels that the market's bottomed out.
It does feel that that's what we said last year when we did the Diwali show. Abhiram, what's your own view? I mean, are there, forget 5 reasons. You know how we've all become with listicles on internet, 5 reasons, 6 reasons, 10 reasons. Is there a reason to invest in property today?
So I totally agree. You know, I'll be a little biased because that's where I make a living. But this is a sector that I've followed both as an investor and as a developer. I feel it all depends on the choice of markets. 2 markets that are very personally dear to me and to our firm in terms of investment that we are looking forward to or have done in the past. A is Bangalore and B Hyderabad. I think there are pockets in these in specific micro markets we can talk later, wherein one can look at sizable returns upwards of 10%, which also is the opportunity cost of capital if an end user is funding it from a housing loan. And there is incremental value to be created. So I strongly feel, as I agree with Anshul, that the property, we can never really know when it has bottomed out, but there is definitely a chance. I would say another 3 to 6 months, with a fear setting in amongst the developers of RERA coming in. These are markets where the trust deficit is not as much, and it's a good time for investors also to come in along with end users.
Okay. Sameer Jasuja, here's, when we started the show, there were markets where we saw that there's been 17-18% returns. Those returns have now come down to 5 to 6%. And I hear varying opinions. I hear that opinion that, look, this is a cyclical industry. Right now you're in a down phase, there will be good times. On an average, HNIs make so much money in real estate, so why shouldn't even a common man be able to identify great residential property and make money in it?
Well, the whole dynamics of the real estate industry have changed over the last 4 to 5 years. We've had a situation of oversupply now, which was never the
Did
case
anybody
earlier.
see it coming? This oversupply, did anybody see it coming? Developers after developers were launching projects, and Samir, guys like you were giving them research. So did anybody see this coming?
Manisha, unfortunately, not even 1% of the developer community looks at research. This industry purely goes by gut.
Yeah,
And sorry.
No, I think there were research reports galore which said that the oversupply. If you look at Dwarka Expressway, people just talked about the amount of supply that's coming in. If you looked at Noida, Greater Noida, or Expressway,
So there was
Agra Expressway,
research pointing to it, but developers didn't really go by that.
because
research.
most of the developers said my property will sell because my property is better
they
than
have-
others.
You
right?
see,
Okay.
I just add to that, I don't really blame the developers, but because if you look at the track record for the last 15, 20 years, they've been able to sell properties on plan before even laying the first brick.
Right.
They've been investors lining up. That all has changed mainly in the last 2 years.
Right.
And now everybody is looking to get out of the industry, or they've understood that now there's not too much money in the industry left. We have 21,000 developers that we're tracking. Believe me, Manisha, I didn't even know, there would be 21,000 developers probably literally in the world. If you go to places like China, or you go to other places, there won't be more than 200 developers. Here, everybody just got into the business. If you look at every industry, whether they were hero cycles, or whether they were making
Even
pan
they got
parag,
into, yeah.
or whether they were doing anything, they just got into real estate because it was the best performing industry in some respects, with respect to price appreciation that they got, with respect to their land banks, or the profits that they made with respect to premium sales, where they kept on raising the prices.
So which side are you on? Are you with Anshul, where you say, hey, listen, not more than 5% inflation link, so really the end user great time, but investor no. Here you have Abhiram saying, why not? There are still pockets which will give you 9 to 10%.
I would go with Abhiram right now, because I definitely think that there are very exciting micro markets where you could get a 10% annualized return, but you have to be patient, and for sure that is not happening in the next 2 years. You have to have a 5-year horizon.
So 5 years?
So if you have a 5-year horizon, you can see in certain micro markets your prices probably going up by 70 to 80% from where they stand today, which is roughly a 10% compounded yield.
Okay.
So that's what we definitely believe. But yes, you have to do cherry picking. You have to be extremely smart about the location that you're buying into. You got to look into employment generation zones. You got to look at the infrastructure that is coming in that area. You have to be a research analyst to buy real estate now. So
which
wasn't the case earlier.
Okay, so Vikram Goyal, I'm going to come to you. There was a time when, there was a reason why 50% of India's household savings went into buying real estate. Everyone thought that real estate cannot fall, right? It may go up by 5%, it may go up by 10%, but here I'm buying an asset which is not going to depreciate. Now that has changed definitely. And now we are coming to a situation where we are saying buy a real estate only if you want to live in it. Otherwise, to diversify your portfolio, it is not the way to go. Is that what you also subscribe to?
Manisha, I would rather say that, once you look at the overall, the breadth of the market, and if you look at the breadth of the market, India is still an economy where the actual user is still a large number.
Okay.
Now, when you look at the actual user being still a large number, which means, clubbed with the fact that the Indian demographics have always favored having more housing units to be bought. We have more people and more double income couples who are earning, and they want to buy properties in India because naturally we don't have, people buying initially. We had a saving economy. Those were the macros. Coming to the current situation, where you see in the last 5-6 years, things have been very, very different, right? In certain micro markets, like everybody has said, there is an oversupply situation. Today, I think what has happened in the last 2-3 years, which is relevant, is whether you have a financial institution or a private equity player. They are very prudent in terms of where they're putting money. They're more involved, hands-on with the developer in terms of sizing of the project and pricing of the projects. Maybe the price of the projects have not broad-based gone down, but the size of the projects have come down, which means that a 2-bedroom was 1,400 has become 1,000 square feet, and to that extent, I think the affordability has gone up. So I would still say if the track record of a developer is good, and if you are an actual user, which is what I think Anshul also mentioned, I think it's a very good time for you to buy. You have to look at the social infrastructure around. You have to look at the track record of the developer, and you definitely have to look at why you're buying a real estate. I also agree with Sameer that for certain investors, if they're a little patient and if they cherry pick and they do a little research in terms of which is the financial institution which probably has, basic research beyond legal and technical checks. If you check which is the financial institution which has approved the project, who are the guys who funded the project in debt or equity, what is the track record of the developer, what are the existing customers in their existing project saying about this developer, these could still give you a good return if you were to look at a horizon of about 3 to 5 years as an investor as well.
Oh, okay, interesting. So you're saying, unlike what it was earlier, that you just went in and bought real estate hoping it would go up, now, just like stocks, you have to put in a little bit of research, especially if you're an investor and not an end user. End user, well, your decision will depend purely on the fact that, hey, my property shouldn't become cheaper because notional loss is very high. And second thing that you would actually want is that there is some amount of appreciation going forward and you buy it close to your work area or at least in areas which has good social infrastructure. Here are some of the key trends from Cushman report. Let's just take a look at these because some of these key trends also will become a point of discussion. By 2015, the report says due to low sales velocity and piling up inventory, the number of new launches decreased to approximately 1 lakh unit launches across top 7 cities, the lowest launch activity in the last 8 years. Anshul, here's my question to you. The way I look at it, when I look at either shrinking sizes or I see that the project launches are going down, and then there's this whole big fear about RERA, that after RERA, developers will, the velocity of launches will go down even further. Don't you think at some point this oversupply is going to get absorbed? And prices will, it's actually detrimental to keep prices down.
Yeah, no, absolutely. I think on the other side, there's inflation in costs as well in terms of construction costs. But the two things are going to happen with RERA. One, I think the number of developers are possibly going to go down from 21,000. But look at the numbers, 21,000 developers.
Yes. I really want to celebrate that. 21,000 is a crazy number for any industry.
But even if it comes down, it's not going to come down to 200 tomorrow. It's still going to be 10,000, 15,000 developers, and they've got to do business, right? So as soon as the market starts improving, you will see launches again going because there's 10,000 or 15,000 developers who still want to do business because they've bought land and they're sitting on that, right? So, and then there's this question of inventory overhang, right? So once the inventory starts getting absorbed, you will again see the launches going up, right? And that will keep the markets at bay. What you've also seen around the world is real estate at best has been an inflation hedge. Now, in an emerging market,
is that so?
Yeah, in emerging market.
So then why do all HNIs buy real estate?
Because in emerging market, the curve really depends on GDP growth, and if you catch a good curve, which is the 2007 to 2010-11, it was a very good curve in India from a pricing perspective, price to income ratio, because the incomes were rising very rapidly. Now that's no longer the case. If you look at any developed market, at best, the real estate appreciates just over inflation, right? So long term, if we're saying that our CPI is going to be 5 to 6%, right, and our markets are maturing, I'm not saying it's fully matured yet, you probably are not going to see returns which are in double digit in my mind on real estate, given the demand supply dynamic as well as the dynamic around what happens in matured markets.
Feel free to button.
Add one thing over here, but when you talk about mature markets, your rental yields are 4 to 7% for residential property even.
Fair enough.
Here it is 0.5 to 1%.
Fair enough.
So if the Indian real estate scenario,
and does that mean the pricing is still high, capital value?
Yeah, absolutely.
So
that would be my question.
no, I can also say that the affordability with respect to rentals is very low.
Okay.
Right, that is also a possibility.
Absolutely.
Right.
Yeah.
So the fact of the matter is, and we'll come to, I'll give you a case in point that in 2008 on the Golf Course Road in Gurgaon, the rentals were twice as high as they are today. So affordability of everything has gone, I would say, at least double, but the rents have gone half. And capital value has gone higher.
So Sameer, will we get that time back? The 2008 to 2011 or 7 to 11 where incomes rose so fast and you had, real estate actually giving you double digit numbers which have all moderated if you didn't really sell at the right time. Are you going to
And the
get
supply
another
was not
cycle?
that high
So
in that time,
I
right?
will say that 7 to 11 isn't coming back.
7 to 11
But
isn't coming
neither
back.
is
Okay.
are we going to be in the 12 to 15 situation as well. We're going to be somewhere in the middle.
Okay, somewhere in the middle. Abhiram, come in here and tell me, to put these things together. We are talking about a growth economy. We are saying that, hey, how are we forgetting the 7.6% number which IMF is talking about? Our own government says 8%, and real estate is so closely linked to that growth, right? So why are we still being so circumspect about the kind of returns which real estate can give us?
So, all these numbers that we talk are obviously averages. And the key over here is to identify those areas or micro markets, obviously, which means that there are areas which will experience higher growths and lower growths. So why not identify those higher growths? I'll give you an example.
So start with, so here's my next question, and you might start that chain of discussion. Give me 5 markets which you're confident about, which you believe, come on, it's Diwali.
So,
The viewers need to know which markets.
Let's focus in on a market like Bangalore. Now, if you look at Bangalore on a grid, let's say North Bangalore, there's a lot of development being done in the North Bangalore, the KIDB, etc. All these software development.
So you're talking about from Hebel, Yelahanka to the
way.
Devanahalli,
Yes.
the airport city.
On both sides, there is a lot of course, one has to bear in mind that it's a 5-year horizon that one is looking at.
Okay.
So if you today,
so we're establishing that please don't expect great returns in 2 years.
So not always apartment, but even plots of land of 40, 30, 20, 30, 40, depending on how much your ticket size, ranging from 15 lakhs to 30 lakhs. A lot of young software professionals are actually putting in their surpluses, even getting funding from banks in plots of lands where one can see a reasonable appreciation over a period of time. That is one area which I see. Also in terms of the east-west corridor now coming into the metro connectivity. So west, which was always a stagnant residential zone, is also seeing a lot of activity. Even in the southern part of Bangalore.
Okay, now you can't cover the entire Bangalore market. That's not fair. You need to give us key markets. That's hard for anybody to decipher. But just, okay, within Bangalore, then which is the best growth corridor, according to you?
So again, if you are looking for end usage, I think Bangalore, it would make sense to be closer to work. So there, it's not so much of an investment decision, but purely from an investment decision, these 2-3 micro markets.
You mentioned Hyderabad. Anything in Hyderabad which catches your attention?
Absolutely. I think that is one excellent market. See, if you compare Bangalore and Hyderabad, 10 to 15 million square feet of office space being leased out in Bangalore versus 5 to 6 million square feet annually in Hyderabad, which is almost half. But if you see the absorption, the absorption is much lower, is about 1/5 in Hyderabad, which basically means there is a lot of, captive, there is a lot of abundant demand which had been waiting because.
So there's latent demand which you think might actually unfold. Oh, very interesting. Okay, let me go to Vikram first. Vikram, what is your sense? Hyderabad and Bangalore, of course, certain micro markets, we are saying stay close to the ITS sector or the employment generation hubs. But in terms of large cities, where is that confidence that, okay, this city is probably going to be the one which might turn around, or any micro markets which might turn around faster than the rest?
Okay. Manisha, I think, I would agree with what's being said earlier, and I'll sort of try and round up very quickly. One is, I think our expectation needs to be a little more moderated, because what has happened in 2007 to 10 will not happen again. You also mentioned about the inventory overhang, and I think what is happening is the developers today are focusing more on completion of the existing projects, and maybe that's the reason of why we don't have the new launches happening. And then coming to this, in terms of what suits an investor, I think every micro market will offer opportunities. And with the traffic increasing in most of the big metros, one has to be very, very sure that you should be investing in city which you're staying in, and you should be investing in a micro market you're staying in. So if you're in Whitefield, then you should look at something, which is around Whitefield. And if you can't afford Whitefield, then maybe, you can look at, say, Marthali, which is about 10% lower than that. Hyderabad, of course, the entire high-tech city sort of corridor is very, very interesting. But coming to Bombay, for example, you have the western suburbs, which was already done well. The occupancy levels are very, very high when you start from Bandra to Andheri to Borivilis of the world. But it's the central suburb which have done very well over the last 3-4 years. So if you are somebody who understands central suburbs much better, then maybe, depending upon your pocket, you can look at anything starting from Chembur to Vikhroli, or somebody who wants to play safe, you can look at, if your office is in Powai, you can look at JVLR and Powai, those locations. Thane is a great location. Thane is called a Lake District city. Infrastructure is very, very good. Approach to a lot of cities within Thane and outside of Thane is fantastic. So I think each micro market within a particular city will have opportunities. But you should buy a property which you understand, where you understand the micro market very well and you understand the social infrastructure very, very well.
Okay, you've not mentioned National Capital Region at all, where the maximum distress is. Okay, Anshu, take that.
Yeah, so I look at two things. If I want to get,
I could maybe.
if I want to get a 10% return, I agree with the gentleman here. You've got to look at micro markets and be a research analyst to be able to buy an apartment. So I think I'd look at two things, which is the commercial growth corridor, because offices fuel employment and therefore people living there, and transport corridors, right? So for Bangalore, North Bangalore, I think, but I would stick around the Hebel area, maximum maybe 7-8 kilometers
and
from
not
Hebel.
go as far as Devnahalli.
No. So I'd stick at the Hebel area. For Hyderabad, I'll stick at, area around Madhapur, Gachibowli, growth developments in Pune, I'll stick to Hinjawadi, which is the new growth development. NCR, interestingly, and that may be a contra thought process, I would go for Golf Course Extension Road. Because this side of Gurgaon is established, rates are established on Golf Course Road. Golf Course Extension Road is faring poorly today. There is stock there to be bought at a discount. We know that the commercial office supply has finished in rest of Gurgaon, so the commercial demand is moving towards Golf Course Extension Road. The road networks are all coming up. That is an area which will give that return in the near term, in 3 to 5 years term.
Okay.
Similarly, Noida Expressway, right? While there is a lot of inventory on Noida Expressway, but at the end of the day, corporate demand is going there, and buildings are filling up on Noida Expressway.
Okay.
Right? There's still some to go, but we see demand going in there.
And
which means,
metros are going to be a big boost. It's on track, in fact, ahead of time. So Noida Expressway and Golf Course Extension, you've picked up two markets. In fact, you've given us precise markets. Hinjewadi, and you've said Hebel in Bangalore. You've said around high-tech cities, so Gachibowli and Madhapura in Hyderabad. Wow.
And Thane Belapur Road, so maybe Kalyan Dombivli belt in
Mumbai.
Mumbai,
All right, okay, interesting. So that's the kind of precise answer I want from you, Mr. Jasuja.
Anshu's done half my job already.
All right, so let's have some, it'll be nice to have other experts say, okay, we also have a good feel about this market.
I will say, just add to what Anshul is saying. With respect to Hyderabad, there is one very important factor why Gachibowli and area will do very well, because there is a demand-supply mismatch there, where demand is much higher than supply.
Abhiram just said there's latent demand. If you look at half the office space and then you look at the absorption, it's 1/5. So there's clearly a gap to be covered.
Definitely. So that's one. Hebel area second. I will not agree with Anshul on Noida Expressway.
Okay.
I think that there is 10 to 15 years of supply that has got created on Noida Expressway and around.
Okay.
So that's precisely the reason
Jewar
why
could change that. That airport before elections could change
nothing
it.
Can change it. I've studied
At
Noida
least
very
investors
deeply.
will get some exits, if nothing else.
On the golf course extension side, I will agree with Anshul. I would also, according to me, the dark horse also is Dwarka Expressway. Why I'm saying Dwarka Expressway is because today, if you're a smart investor, you can actually go and get almost a ready project in 4,500 rupees a square feet. Give it 5 to 7 years.
To koi nahi raha. Nobody's staying there. And you will have to pay maintenance.
But this, let me complete. Like when you go to New Gurgaon also today, you're getting tenants at 5 rupees to 10 rupees a square feet return. Right? I'm talking about return is 0.5%, but you're getting a tenant. You're getting a tenant there. Dwarka Expressway, why I'm saying that is that look at the proximity and the location. Look at the price point. That market had gone up to 12,000 rupees a square feet.
So you're saying, okay, great bargain deals available there.
And 5-year scenario where I'm waiting for the infrastructure to come in somewhat way. Maybe give it 6 years. But that 4,500 has a good chance, and I said dark horse here, to become a 11,000-12,000 rupees.
4,500 is very distressed sales happening.
But
generally
that's what's available.
Is at 5 to 6. Okay.
It's available.
Other markets,
today.
Pune. Hinjewadi?
Pune, as we speak today, I am of the opinion that Pune is suffering a lot. right now, right? So Pune, I would go for, I'm good with Wakad, I'm good with Baner even, for that matter, because these are very well established markets with good projects coming in there, and they've got that proximity to Hinjewadi as well. And the prices, Baner of course is more expensive, but Wakad is definitely quite affordable even now.
Okay.
So those two markets, and of course the third micro
Finally,
market.
Mumbai.
Mumbai, you know, according to me,
Now
Navi
you're
Mumbai,
giving us
nobody's
too many
spoken about.
markets. Ah.
So Kharghar is one micro market I am very bullish
In Navi
about
Mumbai.
because of the kind of connectivity and the kind of social infrastructure that is coming up over there.
Okay, very quickly, gentlemen, I know we didn't cover this one, but if I'm an existing investor sitting on a property, want to exit, you're saying exit, right? Because there's an opportunity cost. Please move that money to stock markets, which will probably do better with a 7.5% GDP growth than real estate will do.
But
What about you?
If you have a property which is ready built where people are living, don't exit at a distress.
Don't exit at a
Just
distance.
hold.
Don't get nervous about it.
Just hold.
Okay.
Because somebody will want to come and live there. You may have to take 10 to 15% off the height of the market, but not a 20-25% discount. And and if you have to take 10 to 15%, think about it. Even if you take that money and put it in safest investment in
Even
2
the
years'
markets,
time,
it's going to
in
be
2 years'
hard.
time, even at 7% liquid fund or whatever it is, in 2 years' time, you will be able to recover your 10% discount or more.
Vikram, what about you? What would you advise investors who are stuck with real estate right now?
But I think I agree with the gentleman saying that we don't need to get nervous. I would add to it saying that if you have a buyer, before you sell it, you need to understand where would you deploy the money. Now, if you're someone who believes in fixed deposits and you think that, I rather have money safe, my principal is safe, it will earn 6, 7, 8%, and then you have a buyer, go ahead and do it. But if you're selling a property to get into another property, then you really need to weigh your options. So I think it's very important to weigh your options, otherwise just stay put.
Gentlemen, thank you very much for joining me. It's been a very interesting discussion, debate, and of course, lots of key takeaways. Thank you so much.